So are we about to get the final rate hike out of the U.S. Federal Reserve in a couple days? Well, market participants and non-participants will certainly be hoping that's the case. Hello, everyone. Monty here, market analyst at IG UAE. And as always, we got plenty to process. We're going to take, first off, we got the First Republic Bank. Expectations are unconfirmed report that we should be getting a deal shortly if it hasn't already been made by the time this video has been released. But that aside, we did get some banking woes. Let's just say that these are the more exposed banks when it comes to uninsured deposits, and hopes are that well, markets are hoping that fears are going to receive on that front, and therefore we can go ahead and focus on some of the more important items this week. But otherwise, we had some economic data last Friday. PCE, the price index, month on month, as well as year on year headline. Let's say that the numbers were better than expected in the sense that they were lighter than expected. The growth is only 0.1% month on month, year on year dropping to 4.2%. Look at the core though, still rising 0.3% month on month. And when it comes to the year on year at 4.6%. Now here's the positive thing though, is that when it comes to both headline and core, they are now beneath the Fed funds rate for the first time in this cycle. So the Fed funds rate 4.75 to 5%. So finally, in real terms, you can say that it is considered to be positive. We also had the revised figures out of U of M. Consumer sentiment stuck at 63.5, just like the preliminary reading. But the 12-month inflation, it's been a worry that after it spiked to 4.6% in the preliminary reading, it's stuck there at 4.6%. The 5-year rising from 2.9% to 3%. These aren't figures that the Fed wants to see. I think that's going to one of the negatives when it comes to pricing data. The consumer inflation expectations still hot, especially over the 12-month period. We also had big earnings from big tech. I should say from most of big tech. Microsoft. Long story short, Microsoft and Meta share prices outperforming. When it came to Alphabet, decent finish week on week, but Amazon though getting hit, especially because of that slowdown in growth when it comes to cloud computing. I'm going to go ahead and pull up IG's trading platform just for a moment. You can take a look at Nasdaq 100. Outperformed for the week. Technical overview still bull average, means averaging higher even if some of the technical indicators don't point to a trend higher. It's going to be, we are still in some of these wider channels when it comes to some of these key indices. So in general, you're either seeing consolidation with positive bias when it comes to the technical overview for some of these indices. The link to the report, by the way, you can find in the description. It's either that or it's a bull average in the sense that they've been averaging higher, thankfully. But that's when it comes to US Tech 100, Nasdaq 100. It outperformed against both the Dow 30 and the S&P 500. I'll tell you what didn't do well, or it didn't finish higher, was small cap Russell 2000, mid cap S&P 400, regional banking ETF still trying to claw back some of that lost territory from the gaps lower that we saw at the start of last week. And so overall, recessionary fears still there. And let's not forget that it's a lot of these larger companies, 6 or 7 of them when it comes to the S&P 500, that have been holding up the market and essentially accounting for most of the gains. I should say a vast majority of the gains that we've been seeing so far. So it's been down to these significant, sizable companies. So far, they've managed to hold the line, and as a result, we've been seeing that these indices managing to outperform for the week. I'm going to go ahead and go back and take a look at what to expect in the week ahead. I'm going to start first off with earnings. We're going to get to the central banks in just a moment. When it comes to earnings, Apple, the last of the FANG plus MT and the largest to report and release its figures. That's going to be on Thursday. And when it comes to economic data, manufacturing PMIs, this is for the U.S. We got them today from S&P Global as well as ISM. And for services, is going to be on Wednesday. I say for the U.S. because we've got Europe and much of Asia, China included, closed. And that means that we're going to get their figures tomorrow and the day after, respectively. For Caixin, for China, you're going to get their readings on Thursday and Friday, respectively. I know focus has been on CFLP's reading, which manufacturing came in with a surprise contraction. Let's just say that if the manufacturing sector of the world's manufacturing powerhouse is still in contracting territory, that's not a positive sign, especially when it comes to commodities. And as a result, they reacted negatively on the news. But all of this, when it comes to the U.S., yeah, we're going to get some manufacturing and services, but focus is really going to start shifting when it comes to data towards Friday's non-farm payrolls expectation. It's going to be a sub 200K growth reading for the month of April. This is if it does come in line with expectations, which roughly 180K, that means that it's going to be the first time in over 2 years that it's going to be below 200K. And leading up to it, there's going to be a lot of economic data. There's the employment component when it comes to the PMIs, so today and Wednesday. But then you got the usual, the usual data leading up to it. You got job openings out of JOLTS. That's going to be tomorrow. You got ADP's non-farm estimate on Wednesday, challengers job cuts, and the weekly claims on Thursday before we get the Friday's NFP. And again, this is all in the report that I mentioned. I'm just going to go ahead and pull it up right now, and just going to go ahead and take a look right here and click on the week ahead. With limited commentary when it comes to some of the other products in the report, but you will get the week ahead and you will get a number of other products here. And just to go back, and continue, because what we've got next, other than the economic data, we got the central bank decisions. I say we talked about the Fed. I'm going to get to that in just a moment. But let's go and start with the other two amongst the FX majors. The Reserve Bank of Australia, they're going to be tomorrow morning. They're expected to be on hold again at 3.6%. So far pricing data has been favorable, but let's just put it this way: is there going to be another tussle over a rate hike to show at least that the tightening cycle isn't over? We did hear from Governor Lowe prior about talking about how just because they didn't raise rates doesn't mean that people should assume that the rate hiking cycle is over. So I do think they're going to continue to push that narrative and at least make it a debate over whether they keep things on hold or whether they raise it, just so the markets don't get ahead of themselves and think, oh, okay, the peak is past when it comes to the RBA. What about when it comes to the European Central Bank? Now, this is a significant one. It's going to be this Thursday. Another hike is fully priced in. So market pricing, courtesy of Refinitiv, pricing in another rate hike. The question, though, is 25 basis point is priced in. That would take their deposit rate from 3 to 3.25, and their main refinancing rate from 3.5 to 3.75. Minorities pricing that's going to be a 50 basis point rate hike. But here's the thing, especially when it comes to European Central Bank, very, very much data dependent, and it's especially more so when it comes to pricing. Well, when's pricing data going to be on offer when it comes to the month of April? Well, preliminary pricing data is going to be available tomorrow. So you can expect whatever happens tomorrow, and there's also going to be the bank lending, you can expect that whatever gets released, what's released tomorrow, is going to influence the decision of what happens on Thursday, and that market pricing as a result is going to change accordingly. And let's just say that both doves and hawks, and there are plenty in both camps when it comes to the ECB, are going to be looking for some sort of ammunition, firepower that they can use to sort of push their narrative ahead. Now, RBA's tomorrow. ECB's on Thursday, sandwiched in between. It's the big Fed, in this case Wednesday night, our time. A rate hike is heavy by a heavy majority priced in by a 25 basis point rate hike. That's going to take their Fed funds rate from 4.75 to 5% to 5 to 5.25%. Here's the thing, though. Markets are pricing it's going to be the last hike. There is a minority saying, no, wait a minute, there might be, might get past that range when it comes to their June meet. But generally speaking, this is what markets are pricing. I'll tell you where it really differs with the Fed, and that is their anticipation. The markets are optimistic that there's going to be a rate cut later this year, especially if we're going up to this higher range, and therefore there's going to be a rate cut from those levels. And there was pushback from Fed Chair Powell prior, the expectation that pushback is going to continue. And this is happening regardless of rising recessionary fears as well as banking woes. Now, going into this event, I do want to take a look quickly. I mean, usually I like to look at one product, but what we want to do is take a look at just COT speculators and where they stand according to the latest COT report out of the CFTC. So far, the theme has always been that they were majority buy the dollar against, I should say majority sell everything against the US dollar for the most part. That's kind of been the theme. And that still is generally the theme, but you got to note take a look at some of the details when it comes to the euro. The euro was a key exception where they were majority buy for quite some time, and they're just shy of extreme buy territory. Comes to the pound, they shifted to majority buy, I should say slight buy, a couple weeks back, and they've pushed further into slight buy territory, 51 to 53%. Outer circle is most recent report, so last Friday's release, which positions are as of last Tuesday. The inner circle is from the week before that, so that way you can see week on week exactly what's happening. What about when it comes to the other FX majors? The exception really is the yen. So they were at extreme sell 82%, that's risen to 86%. When it comes to Swiss franc, although heavy sell 65%, down to 61%, so starting to pull back. And when it comes to commodity currencies, you got the Canadian dollar falling back from what was extreme sell 78% to 74%, and in the Australian dollar from 66 to 63%. So yes, you could say still sell some of the FX or the majority of the FX majors against the US dollar, but that narrative is shifting, especially if that momentum continues to gather pace. So that's a bit from our end. I want to wish all of you good luck out there and happy takes.